1 quarter. Just 90 days. And NVIDIA generated more than $81 billion in revenue. That is larger than the annual revenue of many major companies around the world. But what makes this quarter even more important is not just the size of the numbers. It is what those numbers represent. Because NVIDIA is no longer just selling chips. The company is rapidly becoming the foundation of global AI infrastructure. A great company does not always mean a great investment. Even the best businesses in the world can become poor investments if investors pay too much. And NVIDIA may be one of the best examples of that reality today. Because as the business continues to grow at an extraordinary pace, market expectations also continue to rise. Investors are no longer paying for what NVIDIA is today. They are paying for what they believe NVIDIA could become over the next decade. That is why valuation matters. Because in investing, the quality of the business is only part of the equation. The price you pay still matters. Fair value does not mean a cheap stock. Fair value is the price that reasonably reflects the quality of the business, its growth potential, profitability, and long-term opportunities. The challenge with NVIDIA is that this is no ordinary company. The company sits at the center of one of the largest technology shifts in decades: artificial intelligence. And when investors believe a business could dominate a massive future market, the market is often willing to assign a significant premium valuation. The question is no longer whether NVIDIA is a great business. The real question is, how much future growth is already priced into the stock today? To better understand NVIDIA's valuation, I use multiple valuation layers. Each layer represents a different level of market expectation. The conservative valuation assumes slower growth and lower investor optimism. The historical valuation reflects NVIDIA's more normalized long-term valuation range. And the optimistic valuation assumes the AI boom continues expanding aggressively over the next several years. The higher the valuation layer, the more future growth investors are already pricing into the stock. And the more optimistic the market becomes, the smaller the margin of safety for long-term investors. Based on this framework, the historical fair value for NVIDIA is currently around $191 per share. NVIDIA delivered another extraordinary quarter in Q1 fiscal 2027. Revenue surged to more than $81 billion. Driven primarily by explosive demand for AI infrastructure. Data center revenue remained the core growth engine for the company, as hyperscalers and enterprise customers continued investing aggressively in AI capacity. Profitability also remained exceptionally strong. Gross margins stayed around the mid-70% range, showing that demand for NVIDIA's AI platforms still significantly exceeds supply. At the same time, free cash flow continued to expand rapidly, giving NVIDIA enormous financial flexibility. The company is now generating cash at a scale rarely seen in the semiconductor industry. And perhaps most importantly, management guided for another strong quarter ahead, suggesting that AI infrastructure spending remains in a powerful expansion phase. For many years, NVIDIA was known primarily as a graphics chip company. First for gaming, then for data centers. But today, NVIDIA is becoming something much larger. The company is no longer just selling chips. NVIDIA is building the infrastructure layer of the AI economy. From GPUs, networking, software, CUDA, AI factories, to full-scale accelerated computing platforms. NVIDIA is creating an entire ecosystem around artificial intelligence. And that ecosystem may be the company's biggest competitive advantage. Because customers are not simply buying hardware anymore. They are buying performance, software integration, developer tools, and an AI platform that is already deeply embedded across the industry. This is also why NVIDIA's margins remain extraordinarily high. The company is not competing like a traditional semiconductor manufacturer. It is increasingly operating more like a full-stack AI infrastructure company. And as AI adoption continues expanding globally, NVIDIA's role inside that ecosystem may become even more important over time. The biggest story inside NVIDIA's business continues to be data center. In Q1 fiscal 2027, data center revenue surged to more than $75 billion, making up the vast majority of the company's total revenue. Just a few years ago, gaming was still NVIDIA's largest segment. Today, the business has fundamentally transformed. AI infrastructure is now the core engine driving NVIDIA's growth. And demand is coming from almost everywhere. Hyperscalers continue racing to build larger AI clusters. Enterprise customers are increasing AI adoption. Sovereign AI projects are expanding globally. And AI-native cloud providers continue investing aggressively in accelerated computing. But perhaps the most important trend is this. The world is still in the early stages of AI infrastructure build-out. Every new AI model requires more compute power, more networking, more memory, and more energy. And much of that demand continues flowing directly toward NVIDIA. This is why investors remain highly focused on data center growth. Because as long as AI infrastructure spending continues expanding, NVIDIA may continue operating at a scale that very few technology companies have ever achieved. One of the most important developments this quarter is NVIDIA's transition into the next generation of AI infrastructure. The company is now scaling production of Blackwell, while also preparing the future Rubin platform. And this matters because every major architecture cycle has historically created a new wave of demand for NVIDIA products. Blackwell is not just a faster GPU. It is designed specifically for the next era of artificial intelligence. Large-scale AI training, AI inference, and agentic AI systems. As AI models become more powerful, the amount of compute required continues rising exponentially. And NVIDIA is positioning Blackwell as the foundation for that next wave of AI growth. At the same time, the company is already looking beyond Blackwell toward Rubin, its next-generation AI platform. This shows how aggressively NVIDIA is moving to maintain its technological leadership. Because in the AI industry, performance leadership matters enormously. The faster companies can train and deploy AI models, the more competitive they become. And NVIDIA wants to remain at the center of that entire ecosystem. This is why investors are paying close attention not only to current revenue growth, but also to NVIDIA's long-term product roadmap. Now, let's take a look at some of NVIDIA's key financial ratios for fiscal years 2026 and 2025. In fiscal year 2026, NVIDIA continued to deliver extraordinary profitability and financial strength. Although several ratios slightly normalized compared to fiscal year 2025, gross margin came in at 71.07%. Down from nearly 75% in fiscal year 2025. Even with that decline, The margin remains exceptionally high for a company operating at NVIDIA's scale, reflecting strong pricing power and continued demand for AI infrastructure. Return on invested capital also remained remarkably strong at 91.76%. While lower than the extraordinary 99.62% achieved in fiscal year 2025, it still shows NVIDIA's ability to generate massive returns from the capital invested into the business. Free cash flow margin reached 52.16% in fiscal year 2026, slightly below the 53.82% reported in the previous year. This indicates that NVIDIA continues converting a very large portion of its revenue directly into free cash flow, which is one of the strongest characteristics of the business. Meanwhile, interest coverage improved significantly to 538 times, compared to approximately 333 times in fiscal year 2025. This means NVIDIA's operating profit expanded much faster than its interest obligations, further strengthening the company's financial position. Overall, although some profitability ratios moderated slightly from the exceptional levels seen in fiscal year 2025, NVIDIA continues operating at a level of profitability, cash generation, and capital efficiency that very few companies in the world can achieve. Despite NVIDIA's enormous growth over the past several years, there are still several major catalysts that could continue driving the business forward. The first is the ongoing global expansion of AI infrastructure. Many companies are still in the early stages of adopting artificial intelligence, which means demand for accelerated computing could continue growing for years. The second catalyst is the transition toward next-generation AI platforms like Blackwell and Rubin. Every major product cycle has historically created a new wave of demand for NVIDIA's ecosystem, and investors expect the same pattern to continue. Another important catalyst is the rapid growth of AI inference. As AI models become more widely deployed across enterprise software, cloud services, and consumer applications, the need for AI inference computing power could expand dramatically. NVIDIA is also benefiting from the rise of sovereign AI projects, as governments around the world invest in domestic AI infrastructure and national computing capabilities. In addition, the company's software ecosystem, particularly CUDA, continues strengthening NVIDIA's competitive moat. The deeper developers and enterprises integrate into NVIDIA's platform, the more difficult it becomes for competitors to displace the company. And finally, if AI adoption continues accelerating globally, NVIDIA could remain one of the most important infrastructure providers in the entire AI economy. While NVIDIA remains one of the strongest companies in the AI industry, investors should also pay close attention to several important risks. One of the biggest concerns is valuation. NVIDIA's stock already reflects extremely high expectations for future growth. This means the company not only needs to continue growing, but it must continue exceeding market expectations quarter after quarter. Another major risk is the possibility of slowing AI infrastructure spending. Many hyperscalers are currently investing aggressively in AI data centers. But if capital expenditures eventually begin to normalize, NVIDIA's growth rate could moderate significantly. Competition is also becoming increasingly intense. Companies like AMD, custom AI chip developers, and hyperscalers building their own in-house AI accelerators are all attempting to reduce dependence on NVIDIA hardware. More recently, the market has also become concerned about lower-cost AI products and services introduced by companies like Alphabet. As AI competition accelerates, investors are beginning to question whether parts of the AI industry could eventually become more commoditized over time. Lower-cost AI solutions may place pressure on pricing power across the ecosystem, especially if companies begin prioritizing efficiency and affordability rather than maximum performance. This has raised concerns that future AI spending growth may not remain as aggressive as the market currently expects. Investors are also closely watching whether major technology companies could increasingly rely on their own internal AI infrastructure, potentially reducing long-term dependence on NVIDIA products. Geopolitical risk remains another important factor as well. Export restrictions involving China could continue limiting parts of NVIDIA's international business, particularly in advanced AI chips. Investors should also remember that the semiconductor industry has historically been cyclical. Even dominant companies can experience periods of slower growth after major expansion cycles. And because NVIDIA has become one of the most important companies in the global AI ecosystem, market expectations continue rising higher. Which means even very strong earnings results may not always be enough to satisfy investors if growth begins showing signs of slowing. NVIDIA continues to prove why it remains at the center of the global AI revolution. The company is delivering extraordinary revenue growth, exceptional profitability, massive free cash flow generation, and one of the strongest competitive positions in the technology industry. More importantly, NVIDIA is no longer operating as just a semiconductor company. It is increasingly becoming the infrastructure backbone of artificial intelligence. From AI training, AI inference, networking, software, to full-scale AI platforms, NVIDIA now plays a critical role across the entire AI ecosystem. However, investors should also recognize that much of this optimism is already reflected in the stock price. Expectations remain extremely high, and the market will continue demanding exceptional growth going forward. Competition, valuation pressure, AI spending cycles, and geopolitical risks will remain important factors to monitor. But despite those risks, NVIDIA still appears to be one of the most dominant businesses of the AI era. And as long as artificial intelligence continues expanding globally, NVIDIA may remain one of the most important companies powering that transformation. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching, and if you enjoyed this analysis, don't forget to like, subscribe, and share your thoughts in the comments below.